Well, good afternoon, evening, or morning, wherever you're coming from. We're streaming here live at the Singapore FinTech Festival. I'm Dan Gay, Chief Marketing Officer of BlockCerts Blockchain. And today we have a very interesting panel discussion. And leading off this discussion is an expert in the field of token exchanges and the token exchange marketplace. We have Mr. Christoff Waton, who has joined us here with Fusion SDX, and would like to welcome you here, Christoff.
Yeah, thanks, Dan. Hi, everyone. I'm Christoff Waton. I joined BlockCerts and the Fusion SDX to support the business development and the token development side. What's passionate about the blockchain is, for me, it's mainly the exchanges, the exchange industry, and all the ways that they play in the field, to say it like that. Also, regulations all over the world is something what I'm very passionate about. Been in the blockchain industry itself, working for the past 3 years. Been following the industry for the past 7 years. What I struggle with the most, I would say, in this industry is that we're still with a slim percentage of the global population that are right now in crypto or understand the blockchain technology. When new connections or new people want to step in and they come from the private circle, they call and they spam you frequently to ask you questions.
Well,
yeah. By the way, Dan,
introduce our other panelists here as well.
Can I say something before introducing myself? This is exactly the way I met Christoff in Malta a couple of years ago. He introduced himself like this.
Yeah,
we shake hands.
And then just off the
the same. Exactly like this.
Yeah, that's great.
Probably it's in the business card.
He's got a lot to say, and I know from working with Christoff, he knows a lot about this. I learn something every time I talk to him, Dan.
Yeah, great. Well, let's introduce Mr. Tim Vasco, who's just speaking there, who's the Chief Executive Officer of BlockCerts Blockchain. Tim.
Hi, guys, and Christoff, thanks for jumping in and helping us guide this beast through the all the BS that's out there and tell people about it. It's exciting. This is one of the events that I've been looking forward to the most.
Yeah, me too. It's exciting. And then Daniele Minci, who's the president of Fusion SDX and Fusion Funder. Daniele.
Thank you, Dan. Thank you for bringing me on top of the roof of the Marina Bay Sands.
Yeah,
we have the view on Singapore, so it's lovely to be here. Thank you.
Here, right, Daniele?
Yeah, absolutely.
And then we have
after this.
Yeah, and then we have Tiffany Johnson, who is Chief of Staff and is coordinating a lot of this Singapore event. So thanks, Tiffany, for being here.
Thanks, Dan, and welcome, Christoff. Yeah, good morning, good afternoon, good evening, wherever you are. And I've been to the Marina Sands, so I'm over at the pool, at the rooftop there, Daniele and Tim.
Lovely, lovely.
I should take my binoculars from one altitude then.
Yeah, yeah, it's amazing, Marina Sands.
So let's focus back on you, Chris. You were talking about kind of some of the struggles and challenges and the token exchange marketplace, and it's certainly been a very changing and dynamic marketplace in the last 2 years, and we're seeing a lot of things that have ironing themselves out, and we're seeing true business transactions, and it's growing up. But tell us a little bit more about that.
I think the exchange industry right now, what we're looking at is that everything is going back towards decentralized places in terms of Uniswap, 1inch. I think YFDAI launched SafeSwap now as well. So in terms of exchanges itself, the centralized exchanges are taking a big hit. Not only that, also from regulatory point of view, a lot of them are not licensed or are doing unlicensed token sales. One of them came up today that I cross-checked is where a security token is doing a token sale on a launchpad without KYC requirements, and that kind of stuff is just impossible for me. It frustrates me a lot. When we look at centralized exchanges, what they do in the back end, basically with your funds as well, is something like the transparency is completely lost. And I think that the regulators really need to step in, because we're going to see a lot of rug pulls, to say it like that, coming from exchanges. Those are going to be the next wave.
And you mentioned something KYC, and Danielle, you talked about that as well, just about the importance of KYC and a kind of a differentiator with that as well.
Yeah, I mean, Chris touched a key point about the regulation to the exchange is something, I've been dealing with for quite some time, because very few people daily trading on exchange don't know what is the regulatory framework under which exchanges work. So just to give very little feedback there, most of the exchanges in the crypto space are not regulated. They trade the so-called virtual assets or virtual currencies. And the virtual currencies are, in most of the jurisdictions of the world, are tolerated by the regulator. So this means they're not defined into a specific asset class, and let those platforms to trade essentially those assets until they don't touch the fiat world. Because when you merge a fiat world, it's somehow regulated, and you connect with something that is not regulated, that when regulation comes into play, the so-called fiat to crypto licenses, okay? So this means for people watching us and daily trading on exchange, it's very key to know the risks in trading on a non-regulated exchange, because you might risk that your fund got lost and you have no regulatory protection to recover this, unless obviously you keep your funds in a cold storage. That's a different story. So you don't essentially focus too much on regulation. You trade on a platform and you store your coins into your own cold storage. In that case, you remove this type of risks. Second point about KYC. Most of the people are bored or somehow really pissed off about the KYC requirements of some exchanges. So the so-called, you have to provide a selfie, you have to move your face, you have to provide some information about yourself because they're running some checks in the back. Those informations are very, very important for the counterparty to assess the real risk. But even more important, they have to tell you the way they use your own data. And this is, it doesn't happen very, very often. So this means if you're asking me such a level of depth of my own data, you have to tell me how do you use the data, for which purpose, and how do you store those data? Because in case something goes wrong, you have my password, you have my passport, you have my ID, you have my address that can be compromised. So from a KYC perspective, it's super, super key to understand how those exchanges, those platforms handle your data, because there is a very, very big risk of counterfeiting identity to be used for fraudulent purposes.
Well, and Tim, you might talk about public and private keys and the importance of that too with KYC.
Well, I think that it's interesting what Chris just said. He said that the centralized exchanges are taking a big hit, and these DeFi exchanges, which I think it would be great to hear you explain that, Chris. But the idea that we already heard from the Digital Financial Standards Observatory Group about KYC and the standards that need to be brought into place, and this idea that centralized organizations like exchanges can basically set the rules, right? So I think that as we decentralize and we create both this more see this more real economic fair, transparent trading open up, as we know that doesn't exist in Bitcoin, for example. We also need to see these standards that are there that are controlled and provable, and that's the whole idea of a private-public key pair, that we can track all the way through, regardless of what exchange or what transaction is going on. So maybe explain a little bit more about that, Chris, because a lot of people may not understand like the difference between centralized, DeFi, all the things happening.
Okay. So a centralized exchange is basically where you open up an account. You can see the order books. That's a plus point of a centralized exchange, but it's mainly the only plus point, because in the end, you don't get your private key. So the funds that you send to an exchange An exchange is basically only a virtual representation of the funds that should be in your wallet. But as long as you don't hold the private key, your funds are not your funds. What happens on the back end with your funds is basically it ends up in a pool. It gets dumped by, for example, by market makers. It's being used to manipulate the market on the exchange itself. So that's one of the points that's really discussing about centralized exchanges. When we look at DeFi, with DeFi we need to be very careful because, like, ever since the start of 2020, DeFi was going to be the year. 2020 was going to be the year of DeFi. So when we look at, for example, a lot of DeFi projects came out who had nothing to do with decentralized finance, but they just branded themselves as DeFi just to attract like fundraising, to attract millions. How many of them have been rug pulled by now, have been exit scammed? How many of them, of the team, did not step forward? Because in the end, they built a platform. If you build a platform, you have to take your responsibilities as well. Teams not stepping forward in so many of those DeFi projects. So that's already like very concerning as well.
And so Chris, what is the definition of DeFi, just for those that might be watching that don't understand?
Finance.
Yeah. Okay. Great. Thank you.
So when we look further at what DeFi has to offer, it's basically a platform where you can connect with MetaMask. MetaMask is an add-on. It's a plugin of Google Chrome, and you get your private key. Only when you hold your private key and you send the funds to that account, you will be the only one having access to those funds. Only you will be able to send the funds or to click on your address to share with someone to receive funds. No one else will be able to do that. The same thing goes with those cold wallets like Ledger, Trezor. That's why I use always a Ledger, not your private key, not your funds. DeFi makes that possible. It's basically an exchange. Some of them are working to show the order books. Most of them don't. And on the back end, basically, it works with liquidity pools, of which you get a small percentage. I think with Uniswap, it's 0.3% that gets diversified to all the people that threw in collateral to the liquidity pool.
So Chris, just to be clear, because this happens to me every time I hear Chris talk. I'm like, I'm not sure I'm keeping up with this guy. So the centralized exchange holds your private key,
Correct.
right? And a decentralized exchange, you hold the private key, and you're actually in control of everything in your wallet, your account, and your trading. Is that like
100%? Yeah, 100% correct. Because basically, when you send your funds, okay, you go to a centralized exchange and you send, for example, just make an example. I don't know, just Ripple, for example. You send Ripple to a centralized exchange. Basically, you go to your account, you go to your wallet on the centralized exchange, you generate a wallet address. You send it to that wallet address, but in the backend where you send the wallet, where you send your funds to, is not to that address. You send it to the hot and the cold wallet of the exchange.
Right.
Whatever the exchange does, like again, an exchange works. The exchange itself is just a virtual representation of your funds. Basically, in the backend, those funds are not in your wallet because they're just in the cold or the hot wallet of the exchange. What the exchange does on the backend with your funds, they can manipulate the market. They can go to a decentralized exchange to start dumping on the price, so the market makers need to step up. It's really like I had this experience where a project came at me and I had an agreement with them where I was not allowed to sell more than $500 worth of tokens. They came at me asking like, why are you selling tokens at like thousands of dollars of value? I'm like, excuse me. And I cross-checked. And indeed, because I sent my own funds to a wallet, which was from a centralized exchange. And on the back end, that centralized exchange was just using that address to send out to Uniswap, to 1inch, and started selling the tokens. And they told me while I was in a meeting with them, like you're selling right now. I'm like, guys, I have my hands right here. I'm looking at you. How can I be selling? And that's where we looked, and we figured out that it was the exchange itself that was using the funds. So confronting the exchange, where what we found out, they had to buy back the tokens and initially start refunding everyone. But that's just one of the examples. Centralized exchanges, what they can do with you and your funds, your data.
Right.
That's just one side. From the other side, they don't take the responsibilities. They don't. You have these launch pads, which is a platform for fundraising, basically for startup projects. There's no due diligence done. There's no cross-check on the team done. There's no passports asked. There's no nothing. And it's just like, centralized exchanges for me is just a money grab, and they do everything to survive at the moment.
So it's almost like, when you said that, what went through my head is it's almost like Cambridge Analytica, only with your money.
Yeah.
Right? Basically, it's the same thing, isn't it? Like, these centralized companies like Facebook and so forth can manipulate the data for marketing and all those kinds of purposes. That's what exchanges are doing with the market.
True. Well, what I can give as example is, for example, if you send your Ethereum, let's say I sent 1,000 Ethereum to an exchange, to a wallet, and then at some point you want to withdraw your 1,000 Ethereum. It's like a bank these days. Your money is not your money.
Right.
You need to request, and you need to request it up front, because in the end, in a cold wallet and in a hot wallet, then they need to start taking some of the assets from this account to be able to pay me out, and it's just, it doesn't make sense. If any regulator would put up an audit on all the centralized exchanges, they all can close.
Yeah.
Well, I think it's not that far away that how traditional finance works to a certain extent. Because if you think about, and I give you an example without naming the company. So one of the biggest company in the world by market cap, if not the biggest, but among the first biggest. So, and for sure, they're among the biggest in terms of cash at hand. So if they have to pay a few million in something, they prefer to lend money to a bank instead of using the funds that they have, because of the funds are locked in whatever cold hot wallet-like structure. Okay, so this means what this is telling us is that this new model that is driven by centralized exchange is not that new. Okay, so probably the user interface is new. Probably there are some assets which are really new in the back, but the true business model under which these guys making money is not so new. And I think there is room of building something better. Decentralized finance probably is the beginning, but in my view, it's plugging not only regulation, I'm talking about a compliance framework on top of centralized exchange to make a business model and user experience way better than what we have today.
Exactly. And you make a good point, Daniele, which is these kind of centralized authorities, which is where regulations really originally originated to control that kind of thing, kind of comes back to what you were saying, Chris, which is there is no regulation right now. So imagine what happens as this market grows if there's not regulatory frameworks that can be relied upon and structured in so that we as business people, whether we're raising capital for our companies or investors are bringing capital in, just imagine if there's no structured framework for that, what's going to happen? It's mass chaos, right? And did we see kind of a lot of that in 2017 with the ICO market, Chris?
Yeah, with the ICO market, it was just insane. The more bonus you could give on let's say, a lot of those token sales or ICOs, that like 600% bonus, stuff like that. Basically, what happened with ICOs is, I did see it coming up again right now with this DeFi, everything, and everyone calling themselves DeFi. The only difference is right now they are using exchanges to go for fundraising.
Right.
When there's no, and centralized exchanges, there's a proper governance normally, so there should be someone responsible, but in the end, there's no regulator that will step up. There's so many projects out there that, like a security token, it's asset-backed, and no KYC required. It's raising so many questions for me. Now, a lot of the exchanges are registered offshore, like BVI, Marshall Islands. You don't have a regulator over there. There are no regulations regarding crypto. You just open up your company, it's an exchange, and roll out. Develop it, let's go. So that's very concerning in terms of not only user perspective, but also B2B perspective for the fundraising or eventually getting listed there. Because if you get listed there, to support the liquidity of the order books, you will have an order book manager, for example. He will have the collateral Well, if the collateral is on the exchange or the exchange wallet, I mean, what's going to happen? If you don't know the CEO or don't know where the CEO or the development team who has access to the cold and the hot wallet, it's
Right.
very dangerous, very, very dangerous.
So what would now that we know what the risks are, what would a proper kind of structure look like? Like, in your opinion, what would it look like to bring a proper company through the process? And maybe explain, we talk a lot about utility token versus a security token. Maybe explain that a little bit. You and Daniele talk about that all the time, I know. It'd be great to hear a little bit about that, and then maybe kind of a framework for what a proper process looks like.
Okay, so a framework for a proper process for me, for example, if you look at Huobi for me is still and Binance, knowing their dirty tricks on the back end, but still, those two are doing actually a good job in terms of doing due diligence on projects to get listed, to bring projects to secondary market or businesses to a secondary market. At all time, a centralized exchange needs to take their responsibility of performing the due diligence of the people. Not only that, also pulling like an audit on the smart contract of the token is very important for me. All of those things are not happening. Either way, you're a Class A exchange, which is for me Huobi, Binance, OKX, etc. Those still do it. All the rest, they are struggling to survive. They take whatever money you throw at them. If I would bring one Bitcoin to any Series B exchange out there right now to launch a fundraising, they will take my Bitcoin. They won't do due diligence. They don't cross-check if the company or whatever I want to bring or fundraise for is legit. And that is a problem that needs to be addressed. And that's why regulators need to step up as soon as possible.
Right.
Yeah, I would use an approach, just to move on the practical layer, that none of the sales guys in the world probably would use it. Because when you sell, probably one of the first things you try not to do is to show the risks, right? So I think we have to do the opposite. I think we have to show the risk, and we have to show how those risks are being mitigated. Not to scare people about what's bad, but as long as risks are visible and people know that entering into probably an incremental utility, if we're talking about utility token, or an incremental level of, let's say, return of investment, if you're talking about security token, that is a regulated product, and the people, so the issuers, address this compliance framework. Compliance for me is much more risk awareness than adhering to the rules of a specific jurisdiction. And I think we will make a very big step forward versus where the industry is at the moment, which is trying to escape regulation, try to find a kind of areas where there is a less scrutiny, but helping regulator to step in, not addressing too much concern, but addressing, as we call it, a de facto standard to improve the current framework. So right. I'm all in to step in by taking proactive steps and help regulator to improve the current framework instead of hiding the risks and eventually coming back, having regulator coming back 2 years later after the launch of a token and saying there's a problem. So
well, let's talk about that too, because I agree with that, and there's a lot we could go into on regulations, but let's talk about kind of the fundamentals. Chris, like maybe introduce token markets. What is a crypto? What is a cryptocurrency? What is a token, an altcoin, if you will, or an alt token? And what is a utility token? What are those things? And how do those create this ecosystem that we all see? Like most people see trading in Bitcoin and Ethereum and XRP and things like that trading around. But what are these things? Like, let's start there and then define that.
Okay. I would like to refer first to a study that happened in 1997 when 3% of the people, when you asked about what is email, 3% of the people said, it's internet. It's correct, but it's It's not correct. The same thing is with blockchain. If you talk like 2 years ago, they did approximately the same research, where if you ask people like what's blockchain, not that much people. Cryptocurrency and blockchain, they say it's Bitcoin. Yes and no. A cryptocurrency, yes, Bitcoin is a cryptocurrency, but blockchain is a technology that's actually providing it. When we look at a token can be many things. You can have a security token, you can have a utility token, where security token is, I think it goes back to the Howey test, known in the US,
right?
Everywhere. The thing is that a lot of projects come out with a utility token, but there's no letter of legal opinion that would support it or back it up. So in the end, it is still a security token. When we talk about digital currencies or cryptocurrencies, make use of the blockchain technology. Cryptocurrencies can be used to pay these days in stores with Visa debit cards or MasterCard debit cards. But in the end, what matters the most is what differentiates them all. We have security tokens, we have utility tokens, we have privacy coins and privacy tokens. It all matters if you're a coin or a token. A token runs on, from my perspective, a neutral blockchain, let's say Ethereum, ERC20 token standard. Well, if you would become a coin, if you would be a coin, you mainly run your own blockchain.
Mm-hmm. Okay.
So that's one of the biggest differences to make. Many people say, oh, Bitcoin. Yes, it's Bitcoin because they run on their own blockchain. Ethereum, okay. Bitcoin runs on Bitcoin blockchain.
So there's kind of this crossover, as I've always looked at it, there's a crossover between what you use the technology for, or utility, versus what you can do with the value of that technology as it increases in value, or the trading market, say the speculative market, right?
True.
And I think where it really finally struck me is in a lot of the conversations we've had with BlockCerts is, if you look at Microsoft, right? We all kind of know what Microsoft is, and they've got a technology platform, but they also have shares on the stock exchange, right? And the price of that technology fluctuates. That's the utility. So does the share on the stock exchange. The difference is this share is decoupled from this utility over here, this function. And I think what's interesting to me right now economically, and maybe you can speak about this, is we've noticed, and this is all over the news, financial news, is we've noticed that really price earnings ratios and all those things have been thrown out the window, especially with COVID, because the shares are booming of various companies for no really good fundamental reason. Like there can be just speculation that, hey, this industry is going to recover, but there's no earnings that supports that, right? So you still have this decoupled transaction between what is the market going to do? What's the market think it's going to do? It's always been driven by greed and emotion, and what's actually happening over here. Doesn't the ability of the token now create this transparency all the way through the process? I mean, speculation is going to happen no matter what. Always. It's always going to happen. Doesn't matter what market it is. That's what markets are for, is to allow people to speculate. But this utility function is, does it actually do something? And that's kind of what's been going on in my head. How do you view that in the world of the digital assets?
I think that speculation is just a part of humankind. Speculation is always being fed by someone or coming from somewhere, someone that speaks up his mind or thinks what way things might be going. But mainly in the crypto industry, speculation is there and it's being manipulated. It's being used to manipulate the people and the communities.
Right.
You need to know is when you develop a token, either way you're 100% transparent with the tokenomics. Where do the tokens go to? Some of the tokens are for development. And as long as you don't know the wallet addresses, you don't know which news comes from where. And with the amount of fake accounts that you can create, I mean, I can create an alias in like 2 minutes, and I can start saying like, oh, hey, I heard this news, where people would start to cross-check. Legit people would start to cross-check, and they would come out the real information. So there's so much possible with the speculatory point of view. From utility point of view, it is important that a token needs to have the utility, but for further speculation on the price, as long as you can use a token, that's one way to go. Having a speculatory point of view from that's completely up for the people. It's what the people think and what the people want to give to it. It can go both ways, but as long as the main product keeps delivering, keeps providing update, keeps bringing transparency, I do think that speculative tokens do bring an added value, because in the end, as long as you can have a speculative token towards a native token, for example, conversion, that opens up the market to anyone. That can be B2B, that can be traders, that can be investors, that can be basically.
Well, and that's a big part. Maybe Daniela, you can talk about that, which is this whole idea of liquidity. Like the private equity markets are trillion-dollar markets.
Yeah, I give you very so an example of my life. I went through the similar discussion we're just having right now with one of my partner some years ago, and this guy he was an algorithmic trader and also an investor, and he did not understand in the ICO time back in 2017 how can you wrap utility and true value at the same level into the same token, into the same digital container. Okay, so he didn't understand how market can follow true utility. And then once we start discussing about this, we came up with the idea of having a dual token, one that capture, let's say, all the elements that market needs to be addressed, and the other one that capture true utility, whatever you're doing, into your product, in your software, in your business model. But then when we start pitching this, and we talk also to potential investors, they say, hey, you use two tokens, too complex. The market will never buy.
Right.
How can you market it? You know, you have two things, people get confused. You know, that's the worst advice I followed in my life, because I listened to these guys. You know,
that's why you're here, because
now we're back. And now we're back.
Yeah. Well, and it's exactly what Tim was talking about with Microsoft. You have two things here.
Well, you know, there's a natural relationship. There always has been a natural relationship. When I was teaching finance and all of my graduate work, we always talked about the relationship between the performance of the company and the performance of the shares on the token markets, right? Or on the stock markets. It's the same thing we're talking about here. It's the exact same thing. It's a new set of measurements. But the measurements are the same. Is it real? Does it have utility? Is there asset value in what is being speculated on? Speculation can always go crazy, up, down, whatever. We've seen that. And that's fine. But is there actual value and substance behind it? That was the problem with ICOs. Is it was an idea. It was a white paper. It was the better you were at writing and promoting some great idea and making it sound great, if you're a great promoter, the higher your ICO price went and the more you could sell, right? So with that, I think, maybe bring that whole thing back, Chris, to, where are we in the world of digital trading markets, assuming that we can now start seeing stabilization of these connection points between true utility and speculation, assuming we can structure it in the way that we talk about all the time, like a trading pair between those two that starts that relationship. Like what's happening with Bitcoin and the dynamics around that, BTC, how have those markets, how will it be different in the future? This is you putting your crystal ball out there. How will it be different in the future than what we have seen as the markets have formed around crypto and digital?
Okay. I think when we look at the market cap back in 2017, for example, when we reached the all-time high, we had a market cap of 3.4 trillion to reach a Bitcoin of $20,000. We have a market cap right now of, I think right now, let's say 500 million or billion, I'm sorry, where because the market went down the past 2 days, that's why I say 500. Yeah. And Bitcoin is at 18,000, let's say in a good day, maybe 19,000. So in terms of that, like the market cap is like way lower, but the price is already the same. So that means that a lot of more people are finding a safe haven in Bitcoin. When I look at the future itself, it's going to depend. It's going to depend a lot on what the stock market is going to do. For example, Bitcoin is going to hit Wall Street in 2021, along with 499 altcoins, to say it like that, which is one of my #1 event of 2021. It's already over the whole year because there's no specific date yet, but it's coming in 2021. The confirmation is out there, so that's massive news for the crypto industry. From my point of view, when we talk about the ICOs, like you mentioned, Tim, of 2017, it was just a white paper to attract millions at that time. Not just that, it was also making use of the influencers. Influencers have a strong point because influencers, from some point, they can be seen as an educator. From another side, how much do they get from the project? How much, is it a legit promoter? Is it a legit educator? Is it really an educator, or is it just a guy that takes money to talk, who doesn't do due diligence and just talk about a project and lures people in behind him to get a commission of what people throw in? That's basically what happened in 2017 with ICO. A lot of the products, when you look at the white papers of 2017, it's hilarious. Like a hard cap of, let's say, 300 million, while the product development is just a simple wallet which you can buy like a white label solution of it for like 25,000-50,000, it's not being developed any further. So yeah, I think that the white papers these days are more advanced, more talking about the technology, the roadmap, and what they want to bring. What the ICOs of 2017 learned us is that there has to be an MVP, a minimum viable product, or at least like out of the private sale or Series A, let's say, that funds are being acquired to build a platform or build a product already before you go public. And that's one of the main things that is going to be needed for the future and for the safety of the people as well, for public sales. That's a good thing about BlockCerts. We have built it. And that's something what I can only admire and what I love showcasing then as well. It's not just fun. It's not fundraising. Everything has been funded by own pockets, to say it like that.
Oh yeah.
It's insane. It's insane. Like all the human hours that it took to build it, to put all together, and it's not just building it and putting it all together. It's basically everything what we have in the world right now. When you're a startup, what you need a Pipedrive, a CRM system. You need for marketing. You need MailChimp, for example, for email blast. Yeah. You need Google Analytics. You need so many different points, and all of those points. Like I come from the startup industry for the past 3 years. I know all those programs, and all those programs have their own people, or someone created an account because he needed it, and then that person leaves the company and it's gone, and you need to call and you need to connect and you need to find passwords, and it's a mess. It's a mess. And basically, before BlockCerts, I thought that those programs were fine, but I of course had a showcase of BlockCerts of everything what we built. And it's even an upgrade of it. So I'm very happy about that.
Yeah, well, it is a hard thing to do. It's been incredibly difficult to build that, but it's been rewarding to meet and start working with guys like you and Daniele and bring like this real world of what technology should be, like what technology and markets should be together, right? And you know, just one last quick observation. You said something about Wall Street 2021, which I didn't know. So thank you. Like I said, every day I listen to something, I learn something new. And I just kind of we're running out of time, but I want to close this off with, Daniele, there you go. Fusion, like that's the fusion between traditional and the new world. And God knows we need new models and new worlds more than anything time right now. But isn't that the whole message that we talked about when we came up with the idea that this company that you're running should be called Fusion?
Absolutely. And we want to empower a new generation of entrepreneur to massively grow in whatever lines of business they're willing to, by leveraging on technology first. And also we provide a little of personal touch on this, because we always repeating our business model is not additive. Our business model is exponential, is multiplicative. Unfortunately, we know what multiplicative is because of COVID. 1 + 1 in COVID doesn't make 2.
Yes.
1 + 1 makes 10, makes 20, makes 100. This is the word we want to enable for good, obviously. We want to enable a stronger, a bigger network effects, thanks to the fact that people redesign the way start to work and connect with their stakeholders. Being investors or client is the same.
Well, I would love to continue this. We're out of time, but what I would like to say is we're going to have a breakout session. And the two things I want to start with, Dan. So, and Tiffany, make notes here.
Write it down. Yeah.
I want you guys to talk about two big groups that have controlled this world of technology and finance for a long time when we do our breakout session, if we can. Start out with Wall Street and Sand Hill Road, Silicon Valley. I would love to get into it as to
know that well, Sand Hill.
what that transformation is going to be from where VCs and IPO and the Goldman Sachses of the world have been and where we're seeing the world headed, because that is centralized DeFi. It's fine to talk about the banks, but I would really like to hear some deep dive on those two things.
Yeah, and I think we also need to talk about the BCERT token and the token pair. We talked about token pairs, et cetera. But that's something that we'll address in the next conversation as well.
Absolutely. Good point, Dan.
Yep.
So I think to close with this, everybody, thank you for joining us. Chris, I can't thank you enough for sharing your knowledge, for jumping on board and helping us understand better what we need to work with all of our companies at Fusion and BlockCerts and the BCERT tokens and things like that. And I just want to tell everybody to stay safe, stay healthy, and stay digitally asset connected, because that's where the future is.
That's great.
Absolutely. Thank you, everyone. Thanks,
Thank you, guys.
Take care. Bye-bye.
You too. Bye.